Welcome back to the podcast. My interest and my goal is to help you make better financial decisions. I'm so excited with the work that we're doing together with Life Officers Association of Zimbabwe, bringing to you very difficult conversations, but most importantly, conversations that will change how you relate with money. We have talked in the past quite a number of topics: financial planning, the importance of financial planning, risk and risk management. We've talked about that. We even brought you an actuary to explain to you how do insurance companies actually come up with the premiums that they actually say this is how much you're supposed to be paying. Today I want to have a conversation that is very painful, very, very emotional. But truth be told, we can't afford to avoid this conversation, because if you lived in Zimbabwe in 2008, 2009, you know this. In 2019, you also know what happened. 2023 to 2024, you also know what's happening. I want to talk about something on loss of value. I know somebody who says, I've been raising my money, saving my money. One day, they got a message from their life assurer saying, you have zero. And somebody had contributed for 20 years. But I want to have this painful conversation and say, what is loss of value? How do we even get to loss of value? And what is the way forward? And the point that we made in the past conversations is, despite a hyperinflationary environment, the need is always going to be there. And how do you move forward in such an environment? So, as always, I've invited my good friend, Mr. Rufai. Thank you so much for always coming when we invite you to have these particular conversations. And today, I'm very looking forward to this one. It's going to be a tough one on understanding loss of value. So we want to look at what is meant by loss of value in the context of life insurance companies.
Right. Loss of value has been with us maybe starting in the 1990s.
Wow.
When our currency started to take a dive.
All right.
We have subsequently experienced loss of value in 2009.
Yep.
That was the major one. We had another one in 2018, 2023, and 2024.
Yep.
It's a loss necessitated by mainly problems with our currency. And it's a loss of value that has resulted in expensive and emotional attitudes by our people.
Yep.
You can't blame them.
No, of course.
You have put together some savings, sometimes lifetime savings.
Yeah.
And then all of a sudden that is wiped out.
You have nothing.
In the context of life insurance companies, the period, maybe 10 years, leading to 2009,
Yeah.
were very tumultuous, so to speak. Life insurance companies were struggling to see how they can prevent that loss of value. Several strategies put together, strategies relating to products, strategies relating to investment methods, diversification strategies, lobbying as well, to see how we can be able to save value. But it was like a tsunami.
Yep.
You couldn't stop it. Until obviously in 2009, it resulted in our currency losing its value. I think people will remember that somewhere around in 2005, 2006, I always give this example. A friend of mine was a farmer, went to the government, got a loan
All right.
of 284 million Zim dollars at the time.
All right.
And he was supposed to start paying 6 months down the road.
Wow.
But in the 5th month,
Yep.
3 zeros were removed.
Wow.
So 284 million became 284,000.
Wow. Just like that.
Yes. Meanwhile, he had a truckload of irrigation equipment delivered to his farm.
Wow. So it now is something that is really tangible.
He had the assets.
That's interesting.
And here is the irony of it. Of the 284,000 that remained,
Yeah.
he only burned, the word burned.
Some will not understand.
I think some might not understand.
Yeah.
He only used the $50
To clear that.
to clear that.
And he's got irrigation equipment.
And now I want people to note,
Yep.
he had the assets.
Wow.
The question then becomes, who lost the value? This guy had the assets.
Yeah.
He had the irrigation equipment.
And many people don't want to think that far as well.
Yes.
Okay.
So who lost the value?
The-
If you look back then and trace the system, you will know that somebody saved money.
Yep.
They placed it somewhere.
Mm.
It was then invested or used to buy that equipment.
Wow.
Now, the origins of that money is where value was lost.
Wow.
And this guy is smiling, but somebody else in the system is smiling.
With the equipment you bought for $50.
Yes.
Yeah.
That's the reality of what happened. And that's loss of value.
Very, very interesting actually.
I will, and the idea is also to try and pick up with where was that value lost?
True.
Was not everyone lost the value.
Some actually
Some gained.
value.
Yeah. But at the expense
Yeah.
of somebody else. But the system allowed it.
Mm.
And value was lost.
You know, a friend of mine say I want to thank the government. I'm like, why? He says it bought me a house. So I'm like, how did it buy a house? He says, no, like I've been married about the mortgage. I'm like, so no, just to relate to the irrigation equipment. Yeah.
So, yeah, value was lost.
Yeah.
Now I'm trying to unpack exactly how the value was lost.
True.
Now, to do that, I'll try and explain what happens when an insurance company receives
Yeah.
insurance premiums.
What do they do with it?
John has got a policy that covers them for life, covers them for funeral, covers them for maybe medical aid and things like that.
Yeah.
Now, when they receive that $100,
What do they do with it?
what do they do? What do the insurance companies do with that $100? At the time in the 1990s, until leading to the loss of value, there were 4 major areas where they could place their money, that money.
Yeah.
One, they could leave that money at the bank
Okay.
because obviously they've got maturities coming in.
Yeah.
Some people whose policies are maturing, they have to be paid out.
Yeah.
So they needed liquidity. So some of that money is kept at the bank,
Yeah.
a certain percentage. It will differ from one company to the
Yeah.
other. Secondly, some of that money is invested in equities, stock exchange.
All right.
Yeah. It's the life insurance companies who are heavily invested at the stock exchange.
All right.
We've got 2 stock exchanges right
Yeah.
now, the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. And those investments are sustained by life insurance companies.
Wow.
That's where you get that's where they place some of their money.
Okay.
Then thirdly, there are what are called government bonds. The government wants to finance a project. What do? They raise a bond, a paper,
Yeah.
and they sell it to the insurance companies. That's the way insurance companies assist in the development of the economy.
That's very important.
Say, for instance, you want to build the Harare Kanyemba Road or Harare Bight Bridge Road. What does the government do? They raise a bond with a certain amount of interest that is charged. And then the insurance companies invest in that bond. And they pay the government. So the government then pays back over some period. So some of that money is invested in government bonds. That's the third source, Then lastly, the majority of it is invested in property.
Okay. Real estate.
Right. Now, I want people to understand what happened in 2009 in respect of those 4 items.
Yeah, because, one of the most important questions is, you guys, Magawakama buildings, you built buildings, you've got this particular mall, and now you're saying, I'm not married to you. What happened to those buildings? Yeah, I think that's one of the things people want to hear.
So, out of those 4 investment options available to life insurance companies, let's start with cash.
All right.
Right? In 2009, if you remember well, all the cash was, or after 2009, it was demonetized.
No, you couldn't do anything with it.
Yeah, but the custodian of cash is the Reserve Bank, isn't it? Those are the people who run the banks and so on. There was some process of demonetization. If you had 2 trillion in your account, you were paid $5. I remember that very well. If you had any money, you were paid $5 and that was done.
For your money.
For your money. So, effectively, if my numbers are actually correct, the whole country received something like 120, 130,000.
The whole country?
Of the money that was available.
Okay.
Now, if you look closely,
I
would ask you a question. Wasn't there value lost?
Serious value, I think.
Yes.
Yeah.
There was a loss of value because if you had 10 trillion and people had that kind of money,
and you couldn't take it out.
You couldn't take it out, and you were only given $5.
Yeah, I remember that time. Someone would actually give you their PIN number.
Yeah, we have to talk about these numbers because it's the reality. That's what happened.
It also gives context to the conversation that we're actually having.
Yes.
Yeah.
Then, secondly, equities. If you remember well, the stock exchange stopped trading. Yeah. We had one, the Zimbabwe Stock Exchange. The Victoria Falls Stock Exchange was not
it's quite
there yet.
Yeah.
The stock exchange stopped trading. And when they stopped trading, they resumed, I think 3 months down the road, and every share was pegged at 1 cent.
Wow.
Right? And they were supposed to then adjust. So if you take a stock that was valued at $1, come 2009 when they reopened, it was 1 cent.
Wow. And that's a massive loss of value.
That's massive loss of value. Some stocks struggle to get back to where they were. You get what I mean?
Yeah.
And some could have exceeded, but the general environment was difficult for them to get to where they used to be.
Yeah.
So value was lost.
Significantly.
That's the second way of loss of value that happened. Then the third way was, I've talked about stocks.
Yeah.
I've talked about cash. And then bonds. They all came to zero.
Wow.
So all monies that were in bonds practically came to zero.
Wow. So the same principles that are applying to debts apply as well.
Yes.
So if it's demonetized, it also means the obligation has been demonetized.
So those three.
Yeah.
The only one that could have saved the value is property.
Real estate.
Yeah, real estate. But here is also an issue in terms of property. The insurance companies are supposed to invest a maximum of a certain amount, a percentage of their
in real
assets in real estate.
So you can't put everything in real
You
estate.
can't put everything in real estate.
Yeah.
And that's a government requirement, not that. But that aside, the value of real estate is based on rentals. Yeah?
And that's also a function of the economy.
Yes. After 2009, even up to now, if you go into town and get into any of those big buildings,
They're empty.
they're empty.
It used to be rare to see in CBD to let.
Yes.
Yeah. Now it's normal.
Rentals are somewhere around 50%.
Wow.
So that's the reflection of the value of that property.
Wow.
A rental asset its value is based on the tenants who are in there.
Wow.
But if the rental is at a rate of 50%, it means the value.
It's been lost.
Yes. So that's how value was lost for the economy. Yes. In respect of insurance companies, that's how the value was lost.
Yeah. I actually think many entities are still struggling.
They are because of that.
Yeah, because now we find, like what you're talking about, the level of occupancy in the CBD. It's really, really worrisome.
Yes.
Some tenants are actually moving out of the CBD.
Yes.
Some are building their own properties, and I think that's one of the trends that we find. Eastleigh, Milton Park, Belvedere, people are now moving out, building their own spaces and so forth. Yeah, that's really a real issue. So one of the things that I want us to get to you to address is the difference between loss of value from other financial losses that companies may experience.
Okay, financial losses are based on, or that companies experience are based on their own performance, their own strategies in terms of how they want to trade. You're talking of their profit and loss account, their assets and things like that. And then coming up with, at the end of the year, coming up with an income statement that says you have made a loss or you have made a profit.
Yeah.
And those ones you are able to control most of those issues. But this loss resulting from a currency, this loss of value resulting from a currency, is not is difficult to control. It's something that you can't control. You can work with it to try and do it, but the way it came out, it was so fast. And you would hope for a better day the following day, but that day never came.
True. I actually had some funeral assurance companies that actually the majority of their policies which had matured. And now hyperinflation took its toll. Now you can't even render a service that you actually promised.
Yeah.
And I think that was quite something that was topical. So the question that people ask is, what really contributes towards loss of value? Because when someone puts in their money and they're told, no, after your policy is matured, you're going to get X amount of money, the understanding is maybe this is how I'm going to retire. And maybe that's what is going to take me out of work. I was on radio one day, I think I shared with you this story. And someone says, Dara, I put my money, sorted my things, but everything has been wiped out. And now I'm going back to start working. And I really felt for him. Because imagine you're 65, you're 70. And at the time when you're thinking that, no, now I can benefit from all this wisdom that I've been following up, now you realize you have nothing. So what really causes that? What are some of the primary factors that causes the decrease?
Right. In our fact, I think in our case, I would need to explain what life insurance companies do. We mobilize resources, long-term resources. Long-term was talking of 5, 10, 20, 30 years, 40. So we've got a long-term planning horizon. We don't plan for a year. Now, because of that, our products are also long-term. a 5-year premium term, a war policy term, a 10-year, a 15-year, we're looking at the long term.
Yeah.
Now, long-term mobilization of resources require that there are certain conditions available. And one major one is a stable currency.
Very important.
Because in our case, starting somewhere around 1990, you would plan for this, but it would come up completely different.
Yep.
In a year, things changed within the second. And when we came to 2009, the changes were massive. I remember at some time you could be working with one rate in the morning. In the afternoon, it's double.
You remember Urup Kure Kobe? I used to be Kobe at the time. All those, 1 trillion. No, but guys, when I'm going up, it was still below 1 trillion. Yeah.
So without that stable environment, it creates a difficult situation where planning for the long term can be difficult. So that's the major issue that we can talk about in terms of planning for long term. And that's the major reason why a lot of insurance companies lost values. And they couldn't do much about it.
You don't actually sympathize with some of these guys because you really wonder how they actually came back after such a devastating period. Because you have literally carried risk and you've made publicly a promise. Last time you talked about a culture of honoring promises. So now someone is coming and say, you made a promise and I want you to honor. And I think it was quite a very difficult phase for most of those entities. Yeah.
We are actually a case study now in the world in terms of how to manage and how to survive in a hyperinflation situation.
Zimbabwe.
It's difficult. And it's a classic case when you go to other jurisdictions because they really wonder how
we do it.
How can you survive in that environment?
Yeah.
But I would say our people are very resourceful and we've got people who are good at managing risk.
True. Resilience as well, I think, is something that I've picked.
Yeah.
I've always been saying being a Zimbabwean is a skill. You should just write that on a CV. Zimbabwe. Because remember, you went through 2008, 2009, 8 years too. You went through 2018, 2019. Yeah, here. You went through 2023, 2024. Yeah.
If just compare with Iran, for instance.
Yeah.
Over the period, it's probably has moved from 12 to 18, 17, over the decade and so on. That allows you to plan long term.
True.
Yeah? Whatever you promised 10 years down the road or 20 years down the road will be there.
You're right.
The strategy is to make sure that you adjust the premiums, you adjust the benefit payments and things like that. But generally, it doesn't change much. Whereas if you've got an inflation of in the percentages of trillions annually or monthly, then you are in trouble.
That's true.
Hyperinflation starts at 50% inflation per month.
Wow.
And above. And at least 100% inflation and above. That's hyperinflation. And that's what we experienced.
Yeah.
It was rapid. It was devastating. And we really have to applaud our industry for managing to stay afloat.
Yeah, under the circumstances.
Yes.
That's true. That's true. Right. So the question that I also want us to look at now is the importance of the regulatory environment. How do regulatory changes impact the financial performance of life insurance companies?
Right. In every jurisdiction, you'll have a regulator who will, it's a government institution who will look after regulating the behavior of financial players.
Yeah.
In South Africa, you've got what they call a CISA. It's an organization that sits together, and then you've got the government regulatory institution that goes around to make sure that financial institutions are behaving. Here in Zimbabwe, we've got IPEC, Insurance, Pensions, and the Provident Funds Commission.
Yeah.
That's IPEC. And their reporting system is they report to the Minister of Finance.
Yeah.
And they handle everything to do with insurance. So they handle life insurance. They regulate life insurance. They regulate short-term insurance.
Yeah.
You know, the normal motor vehicle, agriculture, and so on. Insurance. They also regulate funeral insurance. Now, you want to be sure that you understand funeral assurance and funeral services. Funeral assurance is those policies that relate to funeral.
Yeah.
The services are the buses, and those are not regulated by
That's more of Ministry of Health.
IPEC.
Yeah.
They're not even regulated by, but that's a business that's
It's
on
different.
its own. But when you take an insurance policy for funeral, where
you
at
can
the
invest.
end of the period you are paid a certain sum of money and so on,
Yeah.
that's the business of IPEC. So those are the areas that they regulate. And the idea is to make sure that the regulated entities stick within the requirements of prudence. They stick within the requirements of good business.
Yeah.
They take care of their customers, treating your customers fairly. They are able to make sure that they don't mix the business of shareholders and the business of policyholders. Those are two distinct institutions or people. Policyholders, obviously, they've got policies with the institution.
Yeah.
Shareholders own the insurance company, right? So when they do business, the two shouldn't be mixed. Policyholder funds should be strictly for policyholder businesses.
Yeah.
And the shareholders get their payments at the end of the year when their profits declared or things like that. So that's what insurance companies, they also come in to guide investment, to give investment guidelines. Things like, for instance, how much should you put in property?
Yeah.
How much should be invested in? Remember, I've talked about those four instruments that the insurance companies use. Bonds and things like that.
Yeah, stocks, etc.
Yeah. They are also a conduit that we use to lobby for the betterment of the industry. When we want the industry to be improved and we've got certain specific issues that we want covered, we go through IPEC.
Okay.
And they can talk to their so those are the regulatory requirements, those are the regulatory responsibilities of IPEC to make sure that the industry runs properly. Where there are problems, they come in and guide us. So as a result, they require high quality personnel, people who are at the top of their business to be able to monitor the insurance companies.
Then I wanted to check, we've talked about the role of IPEC in terms of regulation, and now we're talking about loss of value. How do they come in terms of protecting the consumers from loss of value?
Right. I've said that they are an important cog in the system in terms of guiding the industry in its operations.
Yeah.
Yeah, on where to invest
The money.
the monies that they receive, on making sure that policyholder assets and shareholder assets are not mixed. So at the end of the day, there are people who look at the whole industry, the life insurance industry, the short-term industry, and so on. And where there is some economic instability, they then come in to guide us. For instance, after the 2009 debacle, industry needed guidance. What do we do next?
Yeah.
How do we handle the different policyholders? There are policyholders whose funds were maturing. There are policyholders who were 10 years down the road, or 5 years down the road, or 20 years down. How do you handle that? So they came up with guidelines that would guide the industry, that we want you to follow this. That way, obviously, we make sure that we've got a clean industry that is progressing well. And they also are there to warn us of possible potholes ahead of us.
Potholes.
Yeah.
Yeah.
Things that could derail the industry. And at the end of the day, they're also responsible for the growth of the industry, together with the industry. We want this industry to grow. And we work very closely with them to make sure that we're in the right track.
That's really interesting. So there's one thing that I want us to explore. I once said about a commission that was set up to look into the issue of loss of value. Now also looking in the regulatory environment, etc. Because now someone who's watching us is saying, guys, but at my money, which I was told is now 0-0. Can you take us through? I know you were following these developments.
Yes. After 2009, we were kind of sluggish because it was the first time that we had a massive loss of value. Somewhere around 2012, 2013, 2014, somewhere there, a commission of inquiry led by Justice Smith was put in place. The commission investigated the 2009 loss of value. Right? In brief, or in summary, that commission found out that the life industry was blamed to the tune of 36% of the loss of value.
36%.
Yeah. And then government, obviously including the regulator or government, to the remainder, which is 64%.
Okay.
Right?
Yeah.
That was the verdict.
All right.
In short, in summary.
Yeah.
Now, what does that mean? That means that we have to come together as a nation, industry and government, to see how we can restitute. The people who were really affected there, the pensioners.
Yeah.
We have to come together and sit down and see how do we create an environment where pension poverty does not take root.
That's serious.
Yeah. The government is on its part working on how to see that pensioners are paid. On our part, we also have been working closely with the government to come up with decisions on how we can pay those who lost value.
Yep.
But the loss of value was a national disaster.
Yeah, serious one actually.
And I think we need to have this conversation in terms of can you restitute somebody who lost their value to take them back to where they were
Is it practically possible
Is
to do
it practically possible to do that? It's not possible.
Yeah.
Because that would mean the government has to pump in billions of dollars to.
To restitute.
If you take that, they're responsible for 64%.
I don't see that happening though.
The industry will also struggle to come up with. Otherwise, we would have to close the whole industry.
Yeah, because I was thinking about the percentage that has been apportioned to the industry. But my question is, what is it that the industry could have done?
Okay, I'll talk about what the industry is doing.
Oh, okay.
As we speak.
In order to avoid going into that situation.
Okay, that the industry has been working flat out. Like I said, we're more like a case study now.
Yeah, on how to survive.
On how to survive in a
hyperinflation.
Hyperinflation environment.
Yeah.
So they've come up with this several. We've got highly skilled people here. We've got actuaries.
Brilliant actuaries.
Saw the
one
actuary
gentleman came very eloquent.
We've got plenty of them. People, sharp people who know how to handle risk and things like that. So they've been anything possible to be done to save the value. Was done. I can assure you that.
Wow.
That was put in place to. But I was also going to say that as we speak, we have made a commitment as an industry that we will start making payments soon.
All right. Connected to the loss of value.
Relating to this loss of value. We have obviously divided those people, beneficiaries, who are supposed to be paid into what we call cohorts, different groups of people. And each group of people will be paid, and then we move on to the next group of people and things like that. But this is done closely with the government.
Okay.
So, yes, we've been working closely with the government to make sure that we come up with the payments. So there is some work closely that has gone to advanced stages.
Yeah, that's really positive.
In terms of
so payments will be done in USD or something?
We are very keen to make sure that this bad chapter is closed.
Yeah.
By making sure that payments are done and we can move forward and start building confidence.
Yeah. And that's very important.
Yes.
Customer confidence. Well, now, I think the loss of value significantly took away people's confidence.
Entered our
life assurance, generally, on insurance in general. So how can we restore people's confidence? And I think this is one conversation we need to have.
Yes, that commitment to make payments, and I'm hoping that those payments will start coming in soon, and that should start to create an environment that creates confidence. We need that confidence. I've talked in the past, the penetration levels of insurance being somewhere around 2-3% now.
Wow.
And they've fallen from somewhere around 8-9% in the 90s, earlier than that. Or 1980, somewhere there, the penetration levels were pretty high. But we have gone down. And we want, as an industry, to grow this back.
Yeah.
We have talked about financial planning. You can't do that without putting aside your insurance covers.
It's very important. Risk management.
Those needs are still there.
Very important.
And we want our population to be able to be covered so that they can be able to plan properly and do that. Diversification of the activities that we do. Investing in portfolios that can prevent loss of value. These are some of the things that our industry has done. We have lobbied for inflation-linked bonds. Remember I said some time back that the government issues bonds to us, and we've been pushing that we get those kind of bonds that are inflation-proof.
It adjusts according to inflation.
Yes.
Yeah, it makes sense.
We've encouraged members to come up with inflation-proofing products. Products that adjust to the inflation.
Yeah.
We have also asked them to review their products every now and again, so that they can adjust them to meet
The realities
changing the realities on the ground.
That's true.
And we've also asked them to adjust their final payments to the consumers, so that whatever product you have, if there's inflation coming in, you adjust it so that at the end of the day you can be able to pay a reasonable inflation adjusted payout. So those are the things that we've really been looking at to see and encouraging our industry to work on. And technology is one.
Yes, true.
Using technology to make sure that we come up with tailor-made solutions. They're critical to meet the needs of the consumer.
Yeah.
And I would say that they are working hard on that.
And that's really positive.
Yes.
I like the point that you said in our first episode, that the need for insurance is always going to be there. One day you're going to retire, one day you're going to die, one day you may be involved in an accident. And I think this is very, very important. So we want to hear, what are your final thoughts insofar as loss of value is concerned, and how can consumers make a more informed decision in such an environment?
We encourage that whenever you make decisions about your own investments, be thorough.
Yeah. Take time. Consult.
Get to know the impact of those decisions.
Yeah.
Yeah. And but I also want to add that the loss of value is a national disaster.
It just didn't affect one person.
It didn't affect one person.
Everyone.
It was through and through, everyone was affected. Some without even knowing.
They were affected.
Yeah. We had a few who got positive, ended up with assets which they hardly paid for.
In fact, right now, the point you're making, there are many people who bend balance for their mortgages. I know someone was owing about what?
Now imagine what it does to the building societies. Are they still there?
No, do you still have building societies?
I don't know.
I don't know. But you see, I think it's one thing people need to understand, that they were winners.
Yes.
In this environment. Winners, and there were also losers.
Exactly.
But you find that the winners, these are people who are usually financially literate. So you notice
and
that
quick to
So you find that people who were not afraid to borrow usually would win. Yeah, because imagine in 2009, if you were borrowed in Zim dollar then, 2008, 2009, with demonetization, you're in. 2018, 2019, 1:1. In the